your spasms and I have it for weeks. That's the Lord telling me you're stupid. You're being stupid right now. How many times I gotta keep you from doing this? That's a natural human tendency. Don't walk on the grass. I'm moonwalking on it. That's what we do as humans. We do everything we're not supposed to do. That's why everybody fails in this industry, because it's so hard to keep control over yourself. And then you have social media, people like me and other people out there that are telling people what they do, what they can learn from you, whatever. Do not let me influence you to do things ahead of schedule. That's why I tell you all the time, take your time. There's no rush. These markets are still going to be trading 6 months from now. Just relax. If you don't give yourself the ability to see it properly, you might become that pink mist and you're gone. What can you do about it then? Nothing. You've wrecked yourself. You've lost more money. You'll never probably want to trade ever again because you did it wrong. But you'll think that this stuff doesn't work. And that's exactly what these people do on the internet. They tried to do something quick with it, or they thought it was going to be 1, 2, 3, watch a video in 5 minutes. Oh, it works because I can prove it in 5 minutes. No, it doesn't work like that. So my encouragement to you, young man, is stop trying to use it right away. You don't know what you're doing. Just like I didn't know how to use all that speed and power in 2008 and in 2009. And ultimately, it could have ended me. So while I still love bikes, I love them, I can't buy one and I can't ride one because I'm afraid that I won't have the outcome that still keeps me here. And I live with pain chronically every single day because I did not listen to good common sense the year before. I should have got rid of the bike because I wasn't able to compose myself and be responsible as a rider. I was literally, a squid. I was out there with not the proper equipment, speeding around with no skill, doing dumb stuff. And I watch kids every single week in our area end up on the news because they do that same stuff. They're influenced by their friends and people online or whatever, and they buy bikes they can't handle it. And what you're learning from me is faster and powerful than that ZX13 was. Faster than a Hayabusa, faster than all that stuff. This stuff is rocket science. And you're out there trying to treat it like it's checkers. Oh, I'm going to go out here and it's all I got to do is this, this, this. And I'm like, no, you have no idea. And that's why I teach the way I do. My concepts are amazing. They're perfect. They're the market. But if you don't have the right mindset or control over yourself, you'll hurt yourself. And I'm ICT, and I just told you something about my personal life that as a human being, I abandoned the rules that I live by. I saw something, I was influenced by other people. I want that bike. And I went to the shop and said, what's the fastest bike right now? That's what I asked for. I didn't say, can you give me something as a new rider? That was not what I asked for. I want the fastest, what everybody wants right now. That's the bike I want. And I walked out there with cash, boom. And I drove it home, brand new tire. Listen, for people that ride bikes, you know how stupid this was. I didn't leave it there and pick it up the next day because it was thunderstorming. And I drove it home in the rain. And I had people laying on their horns behind me because I knew the wrong little movement, I'm probably going to go down with this thing because brand new tires are too smooth. And you're going to hydroplane real easy. And I drove home in a thunderstorm with probably a mile of cars behind me. Some of them went around me and beat the horn, almost cut me off to just show me how they're mad at me. But I was doing everything wrong about being a biker. Everything wrong. I checked every box. Now I live with pain. You can hurt yourself financially beyond your comprehension if you do things wrong. You could owe more money than you have trading in environments like a CPI or PPI number. Say you're ahead of it and you don't know that it's coming out in the marketplace and you're short and then they reprice it hundreds of handles against you. You're not getting filled even if you had a stop loss. Now you owe the broker more money than you have in the account, than you have in your bank account, than you're going to earn in the next couple months if you had no bills. You see what I'm trying to do? I'm trying to prevent all those types of things. So while I may be a character that people like to take shots at, and I love it, but I'm also trying to be a voice of reason because you literally need to learn this the proper way. And it needs to be at a slow pace. Because if you think that you're going to watch a video and figure, I know what I'm doing here, and then you go out there and try it with real money, and you don't know everything about what you're doing and how you think, You might add to a losing position because you think, no, it's right because ICT said so. I have students that act like a fan. I don't want fans. I'm not a celebrity. I don't like fandom. I want people that are responsible and say, you know what? I love the fact that you're responding to people like this and you're reminding us of the risks, because there's real risks in this, folks, more than you realize. And you don't really appreciate it until you first start doing it. And then all the things that you never imagined were a factor, they are much more significant factors than the things you're thinking are big rocks in the road for you to find success. The things you're worrying about right now that you think are impeding your ability to do this, they're small, little, tiny pebbles on the road. They're not going to do anything for you. They're not going to hold you back, but you think they are. The bigger things are the ones that you're going to run into in the road where it's like a brick wall. You're like, wow, I didn't see that coming. I didn't think it was ever going to happen to me. Right. And until you have someone telling you this is what's likely to occur if you try to do this and do that, at least you're aware of it. You're not taken by surprise. And if the people that are being responsible are listening to me, they're like, okay, I'm not doing that because I don't want to find out that I'm not prepared and I hurt myself in the process. That's why the women do better, because they're not extreme risk takers like men are, like I was in 2008, like I was in 2009, and I live with chronic pain now. So anyway, I know. Dude, nobody cares about your motorcycle. Nobody cares about your back pain. So if you look at the drop here on Tuesday, I was in the latter half of it, and you saw that on the execution videos on the YouTube channel. The next day, at Wednesday, we have a candlestick high here. Now watch. This, that is your SIBI. This is your sell side imbalance, buy side inefficiency. This big displacement lower here, this up close candle and this up close candle, that makes all one singular bearish order block. It's not the last up close candle. When I taught it initially, I taught it that way because I knew everybody's going to come out there and start teaching courses with it. There are times where I will do this, and the rules for using the up close candle, the last one before the drop down, that definition will be in my book because it's in written format. That means everything after that will be just parroting the written works of me. The audio commentary, the rules, okay, I have slowly sprinkled the logic out because I'm competing with every plagiarist in the world right now that wants to put this into a book form. They all want to be able to say they had it in their book first. That's why I'm doing it here in my own voice on YouTube. And there's millions of you now have watched me talk about this and teach it. And I'm the only one out here demonstrating it properly. You might have a winning trade here and there, but you don't even know why your trade worked. Like, you don't even know why that order block worked or that inversion fair value gap did what it was supposed to do. You assumed that you could handle that ZX14 and you jumped on it and you took a trade. You just happened to live through it like I did in 2008. And I barely lived through it in 2009. You see the difference? So because of this displacement lower, we can't use this candlestick high here to that candlestick's low. We have to refer to the truest beginning point of the order block, which is this run up. Okay, something here came into the marketplace that was unbeknownst to me. I don't care. I'm not trading in the morning session. But I saw what it was doing. So I went in and I worked with the position of getting short inside of this daily range. The latter portion of it, the afternoon session, post 1:30 p.m. Eastern Standard Time. So we have to look at this candlestick here. So what three price points here on this candlestick are pertinent or useful? We're down into the volume imbalance. See that? And now what you'll do is you will look at this wick here, and you'll look at this wick here. Divide that in half on both of them. I'm not going to do it because I'm trying to get through this lecture. It's already longer than I want it to be. It's always like that. If I say it's going to be short, it's going to be a long one. But I love over delivering. The difference between this candlestick's low and that candlestick's low. Okay, you see that? What is that? That's your fair value gap. This is just a SIBI. This is a fair value gap. And this is why when I look at other people on YouTube and they'll say, "Oh, here's a fair value gap." That's not a fair value gap. That's not a fair value gap. That's not a imbalance that I'm going to utilize. See, what you're thinking is, because you've listened to me with graduated explanations, because I'm giving a little bit like a slow leak. Okay, I'm leaking it out. I'm teaching, but I'm not giving you everything, because you all out there see people trying to pretend that they know what I'm teaching, or they have it figured out, and they're trying to make courses, and now they're writing books on Amazon, because it's very easy for someone to throw something together and Amazon spits it out there. Okay, I could have my books out there in 2 weeks, but I'm fighting with my producer, my publisher, about the way I want my covers to be, because I only get one chance to do this. Once I've released the book for public, I want it my way. And they're wrestling with, costs are going to be. I don't care. I'm not doing it to make money. But see, that's not what they see. They want to make money with it. Okay, so we're kind of back and forth with it over that. So it'll be released when we finalize all that stuff, because I want the covers to look exactly how I want them, and I'm getting a little bit of resistance because of them saying the cost and what I want to receive as a royalty for each book too. It's a little bit of a back and forth. And if you keep messing around, I'm just going to self-publish and I'll get all the money. So if you look at the low here to that candlestick's high, that is that's your real fair value gap. Other folks on the internet may see this and say, okay, ICT says that the best portion of shorts are going to occur in the lower half of that, and we'll leave the upper half open. And that is true when you're trading and utilizing a fair value gap that is a SIBI, but that is not what's going on here. That's why I tell you all the time, there is no one trick pony explanation for a fair value gap. You have to understand other factors and other PD arrays. You want a fast track to selling books and courses and being mentors, because it's easy, quick money. But when people realize that there's someone out there that's authored it, it's teaching it for free, you're losing subs, you're losing subscription costs and fees coming in a month. And then it's going to make you mad, and you're going to hate me, and you're going to create sock puppet accounts, and you're going to troll me, and you're going to leave comments in my comment section that make me smile and make me make longer videos because I like doing it. That is not what we're seeing here. This is a change in the state of delivery right there, that opening price. In a perfect world, price would do this. It would trade up to that level there, maybe just a little bit above it, and then roll over and go lower. That's the perfect world. But if we're thinking about things algorithmically, and I'm teaching you how to use these PD arrays properly, not look for an imbalance that completely closes in, then I'm going to go long or short based on that. That is the worst approach to doing that. That's the worst. That's the lowest form of trading with imbalances. That's the lowest form. Why would you want to do that? You're a bottom feeder doing that. There's more likelihood that your trade's going to fail if you trade like that than if you use the logic I'm teaching, which is you don't want to see them fill in. You don't want to see them fill in. So if this is the change in the state of delivery, that means the price was offered going up. So this is buy side delivery. That means the movement of price is going up. Then you have this displacement lower that overtakes that candlestick's low. Your reference point goes right back to that opening price. That's the change in the state of delivery. If you look at this price right here, this is on a, well, let's just do it. And if I talk about it, it's one thing, but we're going to look at Tuesday's price action, September 3rd, and the price is being annotated here on that opening candle, that price of that opening on this individual candlestick of Thursday, August 29th. So when we drop down to a lower time frame, this blue line is referencing this candlestick's opening price. Okay, let's watch. We'll drop down to an hourly chart. You already see it, don't you? You see it? What's going on there? It's leaving all this open. Light bulbs are coming on. All right. Let me go back to the daily chart. I want you to fully understand what I'm showing you. This candlestick, that opening price, we're drawing that out in the future. When price reaches this level, let me look at this. I know when I change time frames, I get a lot of comments that they're saying, can you go slower when you talk about price and you change the time frames? I get lost. I get it. But that's the benefit of having a video. And it's also where you use the pause button and you compare what my chart's showing. I always make a point of putting my cursor on the individual candlestick. So that way, if you're really trying to learn this, you're going to be doing this same thing in your own charts. Because if you're not doing it in your own charts and trying to replicate what I'm showing you here in your own charts with your own annotations, I mean this sincerely, okay? I'm not trying to be mean-spirited because I really want you to learn. I'm talking to Caleb right now. But other people are they're commenting saying that I'm going too fast or I'm trying to confuse them or I'm trying to hide something. I'm literally trying to do everything I can to give you the perspective of how to find it in your own chart, which is exactly what you're supposed to be doing. My son is not going to just keep getting my charts annotating after the fact. This is the PD erase. He's going to be expected in 2 weeks, at the end of 2 weeks, he's going to start doing it. He has to do it in his charts. That's what you're going to be doing when you trade. When you eventually get to the point when you trade with your own money or take risk with a funded account company, whatever it is, those elements of what you've been doing and practicing are all going to culminate to that moment. And if you've been only looking at what I've created, how can you be confident? You won't be. You won't be confident. You won't know what you're doing. Okay. So this box here is highlighting. We'll do a different color so it stands out a little bit differently. We'll make an ugly yellow. ICT, that's my favorite color. Look, man, I don't like yellow. Okay. So if we drop back down to a 60-minute chart, it's an hourly chart. Where are we at here? Why is that not going on to my, I think I have it set to only show on one time frame, isn't it? Yeah, I think so. All intervals. Now go back down to a 60-minute chart. There we go. Good grief. All right, so you can see what I was referring to here, where price was wicking into that. This is one time where my watermark is not working with me. So here's that opening price on that daily candlestick. That little movement to the downside, and then it rallied up. And then we had that rollover on Tuesday. Right at this moment here, look what price is doing. It's opening and trading right back up to it. It's leaving all of this open and it's leaving all of this open. Now, think about this, young mentors, okay? You're running mentorships. You're trying to charge people money, teaching things you don't know how to use. You're going to look at this chart and say, all right, folks, I'm running a signal room. We're watching shorts. We're going to wait for price to get up into this area here. And right now you're probably getting pissed off because I'm talking about you. I don't know you by name. I know many of them in my mind I can think of right now. I'm not going to out you here. I'm telling you how to fix what you're doing wrong because you're actually hurting people and you're defrauding people and you're teaching stuff that you don't know how to do. So because you're all here collecting and writing notes like scribes, I want you to learn how to do it right because when I'm gone, people are going to be wanting to learn how to do this. And you're the first round of people learning directly as I'm teaching it. So you have an advantage. So doesn't it make sense to do it right and stop trying to be in a hurry to get some quick money? You can get a whole lifetime of money. I could be making $15 to $20 million every single month doing exactly what I'm doing right now. And I'm not even skipping a beat. I don't need that money. You do. So if you want a whole lifetime of educating with proper, respectable clientele that are going to say, you know what, we trust you because you're able to do it. That's what you want. You don't want people that think, wow, I have something I can teach in hindsight and I never have to do it in front of anybody or prove it. I'm telling all of you, if they're teaching smart money concepts or if they're teaching ICT stuff, unless they go out in front of the world and outline exactly how it should behave, everything, you don't even need to take a trade. Don't even do that. Tell us what the price is going to do. If they fall on their face, you just save your money. Okay? I promise you that's the easiest litmus test. You don't even need to see track records. You don't need to see trading logs. You don't need to see broker statements. Have them come out on a live stream, right on YouTube. Everybody can see it. I have students that are doing it. Not all of them are teaching, obviously, but they can prove that they're doing it. The easiest way to determine whether you're going to waste your money is, can this person explain to me what price is going to do beforehand? And because I have always marketed that you're going to learn how to read price action, I cannot promise you that you're going to be profitable. Why? Because you're going to be like I was in 2008. I'm going to buy the fastest motorcycle and get out there and do stuff I'm not supposed to do. That's the reason why I teach the way I teach, folks. So all you foreigners that come at me all the time, oh, bro, you're a scammer. Fuck you. You have no idea what you're talking about. You're broke. I'm not. So this inefficiency right here, and this inefficiency, it should never be traded to. Why would you expect these two fair value gaps to ever be considered at all if it's inside of that bearish fair value gap and it's above the change in the state of delivery? That means it's going to do what? It's just going to go into a little bit. And then you want to see these things stay open, because that indicates that we're really heavy. We're real heavy. We don't need to see it go back up in the air. But many of you that are trying to teach courses and mentorships or signal services, I've seen them. People send it to me. Here, look at this guy at Discord. He's trying to sell short here. He's trying to buy here. He's trying to do that. And I'm just responding with this: the blind leading the blind. You don't know what you're doing. Every little separation between three candles like this is not a fair value gap. It's not. This is further evidence to indicate that you have to have more intel about the other PD arrays, because no matter which one you start with, it could be the breaker block, it could be a propulsion block, it could be a, volume bounce or fair value gap. You have to understand the other ones, even if it's a small little brief acknowledgement. Okay, I recognize it, but that's not what I'm going to trade on. You have to refer to it because it's part of the whole narrative of what price is doing. If I wanted to do it and it was possible, I could just say, here's the order block theory, and you never need to worry about any other candlestick but just this one. You can't. It's impossible to do that because you have to have other information from other facets of what price was doing. That's why you're angry at me, because you think I'm hiding something from you when I've told you that you have to do these things to get the answers you're asking for. I know my limitation as a human being, as a teacher. I'm not going to reach to the levels of what you expect in answers for certain things, because those questions are answered with your own experience. And that doesn't satisfy the people that are just 1 minute trainer, 5 minute trainer, teach it to me in 20 minutes or less. I don't want students like that. I want people that are going to be highly responsible, and they are aware of what's being taught and shown to them, because they can appreciate what's being shown to them because it's the truth. I can make this fraud. I can make this fluffed up and all about Lamborghinis and stuff, but I can't come out here and show you what I'm doing beforehand if that's all that it is. And that's what most of what you see on the internet right now is: show everybody else my fancy, expensive stuff. And once that happens, the novelty wears off. Then what are you left with? The people want to see you explain it. Why should it work in their own hands? Because if you can't show the logic behind why it should do something, why should anybody send you money? Why should anybody send you money for you not being able to prove that you have an understanding of what price is going to do? And you don't even need to push a button for that, folks. That's an easy litmus test. Everybody out there in education has a blank check right now waiting for them. If that's all ICT said I got to do, well, I can do it. Boom, there it is. Watch how many people do it, though. And watch how you get banned. Watch how you get blocked on email, how you get blocked on social media when you ask them to do this stuff. I'm ready for it. I can do this every single day. Every single day. I'm not running out of any yeast around here, okay? This baker's got all kinds of flour and yeast. I can do it all day long. But these inefficiencies they're not going to fill. They're not even going to trade back to. You don't want them to. Now, because we have that, we can drop down to a 15-minute time frame. Man, it's a watermark. Take it off, ICT. I want you to get rid of it anyway. I'm trying to pirate your stuff. I know, clowns. All right, so here's that opening price on the daily candlestick, and it's the change in the state of delivery, and you can see it wicking up into it we saw on that hourly chart. Now we're on a 15-minute time frame. It's trading into it here, and that defines that 15-minute, or sorry, hourly inefficiency, the downside. It's just a SIBI. That's not a fair value gap that you trade. Okay, it's just showing an inefficiency, but just because there's an inefficiency doesn't mean it needs to trade up into it. You want to see where you are in the lay of the land. Where is price at? Where is it likely to go? And how's it been delivered? These two inefficiencies in price, we don't want them to trade to them. We don't want to see price go up there. But watch what happens when it starts to break lower. After returning back to that blue line, which is the opening price on the lower up close candle on the daily chart that frames the full bearish order block. This is what you end up doing with this information. Okay, this is all part of the price delivery continuum theory. Knowing what you're looking for from one higher time frame, and then using the information from that higher time frame, what should you expect to see in price? So it gives me the confidence. It gives me, I know what I'm looking for. I know what I'm going to trade off of. I know how I'm going to place my stop based on this information. Big, huge paradigm shift. Ready? You ready? I don't hear you. Come on, ICT, I'm screaming. So it trades up into the opening of that lowest up close candle that makes the bearish order block. This is the change in the state of delivery. The algorithm is going to refer back to that price. Here we are on a 15-minute time frame. Does it wick above it? Yes. Does it wick above it? Yes. Does it wick above it? Yes. How can you validate that that is really going to be an influential order block, ICT? Look at this lower time frame. What are the bodies doing? What are they doing? Are they just going through it? No. They're respecting it. Oh. So if I can see a time frame like this that's confirming it, that means this up close candle becomes a valid bearish order block. And then I can use its opening price right here. You're going to hear my stomach because I'm fasted. So it's already ground talking. We get that on that candlestick right there. We don't need a close below it. We don't need engulfing candles does this. We don't need an FU candle. All that stuff, that's all 20-year-olds working through a multi-level marketing scam ring, okay? Scammers Incorporated, okay? I got to resist myself because I could have a whole lot of fun with that, but I'm going to do it. But we have that opening price and we get it there. So that validates this as an order block. But now watch, when it does this, the next candle, what does it create? What's this? That's your first presentation. Oh, so it's not limited to 9:30 to 10 o'clock. Right. It's when you're using proper breakdown from a higher time frame down to a lower time frame, using the PD arrays in the proper context and its PD array matrix, where we're at in the lay of the land, that fair value gap, you can trade that right there. Where's your stop go? It's got to be above the order block. So your risk is entry. The lowest threshold entry is this candlestick's high. And that is, I got to move this down or up rather. All right, the fair value gap is here. That candlestick's high is 19,183.25. So that's your entry minus one tick. So you want to get a fill. You want to make sure that you're going to get filled. That's it. Why? Because you have all these other things qualifying and confirming it. But your risk is the candlestick that is the bearish order block, this one here, because it should not go back above that. Especially now because we had this candlestick go above it and this candlestick goes above it. But prior to it validating that closing or that opening price, it didn't need to close above or below it. Let me say that one more time because I just gave a whole bunch of contradicting statements. This candlestick up close is your bearish order block. We don't know that yet until this candlestick crosses down below the opening price. It does not, on this candlestick, it does not need to close below the opening price of that to validate that as a bearish order block. What's good about this is we had this candlestick already trade above this up close candle, which is a potential, we don't know it yet, bearish order block. It wicked above its high there and it wicked above its high there. And then on this candlestick, we traded below that candlestick's opening. That validates that candlestick as a bearish order block. Any stop in this close proximity, you could use the opening of that candlestick right here. That right there, you could be entering, and you can add more into it, into the fair value gap if it trades up into it. You know, that's what I'm saying. Like, you can use that as your entry mechanism. But for stop placement, you have to use the high of that candlestick plus 1 tick. And it never goes there. So that's your defined risk from this candlestick high minus 1 tick, that's your entry, to this candlestick plus 1 tick above its high. So that's your defined risk. And you can see multiple instances where you can get in and get short on that idea, that premise. Anyway, let's go back out to a daily chart and I'll continue on with my lecture. I really missed hanging out with you guys yesterday. So here is the other wick. Guys up at the CME. Damn it, Michael, shut your mouth. You're teaching everything. Beautiful delivery right there. You want to screenshot that, by the way. Right there. You won't find that in Wyckoff. You ain't going to see that in Andrew's pitchforks. My private mentorship students, that's the inside joke. All right, so anyway, all this business in here, we are not looking for that to trade up into these inefficiencies. They should stay open. So in reality, what we're saying is this candlestick's low and this candlestick's high. That's your real fair value gap. That's it right there. Now, let's think about this for a moment, okay? If that's your fair value gap, you hear that? My stomach's saying, you got to feed me, boy. This is your high on the fair value gap, which is the low of the fair value gap, and this candlestick's low is the high of the fair value gap. So that defined range there, this section of price is inefficient in what buy side delivery because this candle moved lower. So in this little section of price action between this candlestick's low and this candlestick's high, we're only focused in this little shaded area. We wait for price to go up into it because what is that doing? It's offering the sell side delivery. That means it's overlapping this down movement between this candle's low and this candle's high. It's inefficient because it didn't have any other candlestick cross over the range defined by this candle's low and this candle's high while price was going up. That's why I use the analogy all the time, painting. You know, when you apply the paint to the wall, first moments of applying the paint with the roller, it's real lush and it's ample supply of paint. But you keep rolling, eventually that roller will run out of paint in certain parts of it, and you'll start seeing these little pockets, these little porous delivery of paint. And then what you'll have to do is you'll roll the roller right back up over top that same thing. Well, it's the same thing's occurring here. You roll the paint down, and then you're going to have these little porous pockets where it didn't create a very smooth delivery price action. We'll see that when we drop back down to lower time frames. But here it looks, you can't see that. So the only way you can see it on this time frame is defining with a fair value gap, which is why I created that concept. Then this run back up into it is overlapping that, even though it wicked and went lower, that delivery right there, that's what I'm studying that. When I was setting up that turtle soup cell, what did I teach you about turtle soups? They're reversal patterns and they're continuation patterns. You can use the fair value gap to get into a turtle soup. Stop listening to Twitter version turtle soupers, okay? I promise you, candle range theory is bullshit, okay? It's bullshit. It's absolute bullshit. So stop it. Stop it. Go out and call it every single day. Walk out here like I'm walking. Call it out, line it up, do it, trade it, and then everybody will buy your course. I promise you, they'll all buy your course and you'll be the next hero. But you're not going to do that because you're staying in the hindsight of 2020. Stop putting sock puppet comments in there. I know you're losing sales, but I don't give a shit. This range in here, it's not because I hate you. It's everybody that's trying to teach my stuff. You don't have any right to do it. All right, so this level here, I'm gonna color this one. We'll do orange and we'll make it real bold. Okay, so that way it'll be this pink reddish area that's highlighted to this candlestick's low. We're highlighting this inefficiency because it's defined by this candle's high, that candle's low. This candle's high is anchored with that broad orange color, and we're going to look at what price was doing here yesterday, and that's what I was utilizing to get short in the turtle soup. And then everything will become perfect. You'll have a clear depiction of what price is going to do because I'm showing you how I executed yesterday. My focus and aim was, I thought I left that line on here, didn't I? No. That was this one. So that price is, you want to have it on your chart with 18,552 and a half. And then the next one is this one. ICT's causing the crash. Don't hate the player, hate the game, baby. So, yeah, of course I'm an anime fan. What are you talking about? So this candlestick high on Wednesday, okay? That run above that, that's my turtle soup. So if I'm looking for this level down here, which I'm gonna label this line with a black level, okay? And that way we know that that's what ICT is aiming for. So between this candlestick's low, this candlestick's high, something in here I wanna attack it. I'm waiting for them to give me a high, a short-term high around time of day that I want to trade. And then I'm going to wait for it to pierce that high. That's turtle soup. What I just said will make sense in a minute when we drop down lower time frames. But I'm thinking that I want to be short above this high and aim for this level right here. That's a one shot, one kill. That's my focus. I want to be above this price and aim for that one. I'm willing to absorb and ride out all the little fluctuations between where I get in at and where my initial stop loss is to where I'm aiming for. That's down here. Okay. How do we accomplish that? Well, glad you asked. Let's go down to a hourly chart. Remember, this orange line is this candlestick's high, so it has to be an entry for shorting above that level. My entry to get short has to be above this candlestick's high. So that's this price up here. Look at this right here. This candlestick's high, my entry going short has to be above that. As much as this candlestick's low. Watch this price right here. So I have a range of looking for a short in that general proximity. I'm waiting for something to form, technically affording me a short where I can frame a stop loss using the language I'm teaching you so that way you can see it conceptually. All right. I promise you, once you understand everything that I'm teaching, the explanations don't need to be this long and drawn out, but because I have so many new students, I'm getting 60,000 new subscribers every month, which is crazy. So imagine my inbox is constantly the same questions, and I'm reminding you to just stick with the 2024 mentorship because it's going to answer a lot of questions more directly than I've ever done in any previous lectures. But you can always go back in your free time and watch those other ones too because it's good stuff. I use all that stuff still. But I'm doing this in live market conditions over live price action so you can see me explain all this stuff and then you watch it happen in your charts and you're left with no excuse. So we're in this little area. The opportunity is from here to here, okay? So now drop hourly. Isn't it fun? You talk too slow, man. You talk too much and you got to get right to the point. So we have this old high, and inside this range here, what's it reaching for? When it wicked up like this, what is it reaching for? Look over to the left. What is all this? That was me framing the order block up here. And then you have all these wicks, which becomes what? Balanced price range. Why? Why is this balanced? Because we have this candlestick opening, trading up here. We have this candlestick opening and trading up here. We have this candlestick opening and trading up here. So essentially what you're seeing is you're seeing a wall of price action that's been delivered here. It's offered buy side and sell side all throughout this range here. And then it leaves it right there. So that means that I can take that idea and say, I'm going to extend this over here. And once it gets into that area, it should have no easy path into all this stuff or higher. So now I'm further refining this down into a small little pocket of price range. So yes, it can touch this. But before we get to that range, when it's trading above this high here, when it's doing this movement on the hourly, what can I use as an initial framework to say, okay, where's my focus at? It's going up to this level, an extreme level, but it's going to have a real hard time getting above that because we've seen back and forth individual candlesticks overlapping in the same range. Then we have this right there where it leaves that balanced price range and it leaves this tiny little section of price action exposed with inefficiency. What is it inefficient in? It's sell side delivery, but buy side inefficient. That means it's got to have at some time in the future, after this candlestick closes and this one starts, to efficiently offer the market fair value pricing. This gap is what it is, should be repriced to with buy side delivery. That means movement up in price, and we get that here. See how it's starting to flesh out more and more. If this, then that. If this, then that. If not this, then the other thing. Or sit still. So now we have this wall of price action. We're going to take that away because it's going to confuse you. This fair value gap, we're going to drop down into a 15-minute time frame. This is all top-down analysis. So here's that high where the little orange level was anchored to. And this gap, this one here, I'm going to take this one off for a second. This gap here is above this old high, and we're trading up. I want to try to take a short as it's trading higher. As it goes higher, I want to sell short into that because it's going into that inefficiency. I had that big wall of price action. Remember on the hourly chart? It's all those wicks that was saying I'm a balanced price range. It might touch me, but I'm not going anywhere. And I'm going to keep price from going any higher. But the wicks can do what? They are allowed to do the damage. That means they can color just outside the lines. So we're seeing that happen here. There's the fair value gap range. It's expanding just a little bit outside of it. But more importantly, my focus is I'm getting above that high right there. Because this is all part of a daily fair value gap institutional order flow entry drill. That means I expect it not to completely close in a bearish fair value gap. I want to see it just go in a little bit like it's doing right here. And I want to see it immediately send price lower. Okay, now we can drop down to a 5-minute chart. Everything starts getting more and more scientific, doesn't it? If I'm watching this time frame, what do I want to see in price? Well, what does my price delivery continuum theory teach you? The higher time frame order flow, any PD array that you're using on a higher time frame, what's higher than a 5-minute chart, a 6-minute chart, a 7-minute chart, an 8-minute chart, anything higher than a 5-minute chart. So what are my usual picks? I use the industry standards because I want to have this little disruption to what you're used to if you come from other schools of thought. So everybody understands the monthly, the daily, good grief. The monthly, the weekly, the daily, the 4-hour, the 1 hour, the 15-minute, the 5-minute, the 1 minute, and anything less than a 1-minute chart. It's just bonkers, right? So I say that with tongue in cheek. The previous higher time frame gave us this pink shaded area for the fair value gap to be defined. I laid the rectangle on it based on the higher time frame. And now because it's transposed to this time frame, now we're on a 5-minute chart, what are the bodies telling me? They're respecting it, aren't they? So I'm getting closer and closer to what it is I'm looking for. Because every frame of reference for time, because that's the most paramount thing, no matter who tells you what, baby, time is the most important factor before price does anything. Because if it ain't the right time, price ain't going nowhere, period. The bodies are saying, yeah, we're respecting that. We're not going to color outside the lines, but the wicks will. See, you watch these wicks when it's happening like this, and you think, oh, they're changing the algorithm. They're making traps. Tell me if I was trapped yesterday, or was I trapping breakout artists? I was fading at the highest form using what I'm teaching you right here. I'm teaching you the real turtle suit, not Linda Rasch and Larry Connor's turtle suit. Buy the book and you'll see none of this is in there. No disrespect to Linda. I respect her. She was a mentor to me through a book. I've never met her before. I never talked to her except for one time she exchanged a reply to me on Twitter. That was it. I'm not a fan. I'm not going crazy like I was with Larry Williams. I have a high degree of respect for her because she had a huge impact on me in understanding stop hunts. That book helped me understand that. But I don't teach anything from that book. And you should all own that book. And by me telling you to buy the book, guess what that does? It cancels out me hiding anything. Oh, he's secretly teaching smart money concepts that were found in Street Smart's book. Wrong, I'm not. I love the name Turtle Soup. And I just borrowed it for my approach to seeing reversals. Because in my mind, I'm thinking every person is a breakout artist, is thinking the same way that the turtle traders were. Richard Dennis taught them to use a 20-day high breakout. If it went above the highest high in the last 20 days, they bought it. And they used the lowest low. And, well, I'm not going to teach. You buy the book and you'll get the rules. But the point is this. None of that's being taught here. But the idea of a stop hunt and then drawing back into the previous range, it helped me understand it, where I was not seeing that in any other books I was reading. So it helped me understand something on a short-term basis, and it gave me something to use and study price action with. Where mine, no disrespect to those individuals that wrote that book, but I absolutely believe, undeniable evidence that mine is the highest tier of application of the idea of a stop hunt. Like, I don't think anybody else has done any better work on it. And if you think that I'm not being truthful in that, show me that book. Show me that author. I would love to have someone show me something better, not for the sake of competition, because they may know something that I don't know. I think it's highly unlikely, but I don't think it's going to happen. But what I'm teaching you is how to use the top-down approach and use the price delivery continuum theory, which is whatever the higher time frame PD arrays have done at a higher time frame chart, the lower ones should start respecting that PD array as you see here. We allow those wicks to color outside that. It's normal for that to happen. But what I'm watching is what do the bodies do? Are the bodies going beyond the PD array that I'm using to anchor my analysis on the higher time frame chart? In this case, we've seen what? No, it doesn't do that. No, it's not doing that at all. When you're looking at a gap, okay, I'll give you something else was just supposed to be in the book. When you're looking at a fair value gap, how far can it go outside of the range that defines that fair value gap and still be good? How wide is the fair value gap? Because the wick can do that range outside of it. That's one standard deviation on the fair value gap. That is not changing anything for me. If it starts going above it a little bit like that, you've seen me annotate trades. It's a mohawk. That's what I type it as. It's a mohawk. It's just a little tiny little stray hair. Somewhat like when you're cutting the grass, you're not paying attention because you're watching the next door neighbor because she's in the bathing suit and you're going to get in trouble if your wife catches you. You leave that little line. You like that stuff, don't you? The little line of grass that you didn't really mow over perfectly, and you look back and you're like, oh, I got to go back over there and fix it because you were distracted. You weren't doing what you're supposed to do, which is follow the process of overlapping a little bit. Make sure you're not leaving any stray hairs, or in this case, little stray areas of grass. Well, that's what the algorithm's doing. It's just coloring outside the lines a little bit, but the standard deviation of whatever that PD array or inefficiency is, the fair value gaps, when you're looking at them like this, they're being refined smaller and smaller and smaller. They're not going to go 5 times this, okay? And then so it's a good trade. It's going to be within the realm of whatever this fair value gap width is. It can color outside the line that much. Generally, it won't do that much at all, but that's the rules for it. Okay. Now, you're not going to find that in anything else. And today, September 6th of 2024 on YouTube, Michael J. Huddleston has given you more context around fair value gaps. Everybody's going to have it in their mentorship now. Everybody's going to have it in their courses, and they're all going to have it real quick in a chapter in fair value gaps for their Amazon book. But you're still not getting everything. You're going to see that that's just small little pieces of it. This technical science, baby. Okay. We're not talking about checkers. So watch what happens when we use the same logic going down into the 1 minute chart. Can you tell I like doing this? Can you tell I enjoy it? I like it a little too much, my wife said. Yeah, you're just obsessive. Well, you gotta be. I mean, because this stuff is boring otherwise, right? If you're not really dialed in and excited about what it is you're learning, how could you possibly be expected to do very, very well with it? You're gonna get quickly bored with it, won't you? Of course you will. So now, look what we have here. Right away, students of mine that have been with me for a long time know that this is a market maker sell model. Where's your consolidation? Right here. Why are you picking that, ICT? Why aren't you using this down here? Because this is all impulsive price action. It's real sharp. We don't want that. Our eye goes for the original what? What's the rules for a market maker sell model and buy model? The original consolidation. That means your eye is looking for a perfect little box of price action. Well, can you see that this to this, those are relatively equal lows, right? Go straight up from there. What do you have? That's your original consolidation. Inside the original consolidation, go back to the original rules. This is old stuff. It can drop down slightly below that low right there, which is what you get. And then once it leaves it, it can touch what? The original consolidation high. Oh, that's support resistance. Save it, pal. Expansion up. Reaccumulation. I'm sorry, first stage accumulation, reaccumulation, or second stage reaccumulation. Then it rallies up and creates what? Smart money reversal. How does smart money know to sell short at the highs like that? That was the question I had. In the 90s, I sat and looked at charts like this, and I think, man, I wish I could trade the Swiss franc and get that kind of move. Man, I wish I could trade the Deutschmark, which they don't trade anymore. I wish I could get in there and trade that. And I went in and I started breaking things down, and I met some people, and little things happened, okay? And some visitors come and see me. So I learned some things, let's put it that way. And what I learned is what you think about what the markets are doing are not at all doing that. So by having what is really going on versus how I can communicate that in a price chart, that's what you're seeing here. You don't need the smart money reversal. And that's exactly what I taught when I was teaching my market maker buy and sell models, which is absolutely not Wyckoff. It is not. Now, the idea, the infancy of Wyckoff, if you study just the beginning parts of that stuff, don't get caught up in all the other garbage, but the overall markup aspect and then the selling off of it, that is a market truism. It has nothing to do with Wyckoff. It has nothing to do with ICT. That's just the way markets do. They go up and they go down. They rally up and they sell off. Like anything else, when the market is hot for homes, it goes up. All the prices keep going up, 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 up. Who sets the price for your house when you try to sell it? Well, if you have a good realtor, they'll say, this is what the comps are in your area. And what do? Well, I want to be the highest comp. That's what I did. And I got $15,000 more than I asked for. And then another house just sold last, was it March? For more than my money, or for more, for the amount of money, more than I sold. And my house had more stuff. My house was the biggest one in development. It had more things done to it inside. And they sold it for almost $100,000 more than mine. But I just wanted to unload it. And you set the price for your home when you're trying to sell it. Who owns the market? That's a question that's going to keep you up at night. Who owns the market? you're never going to meet them. You are never going to meet that entity. You all think it's a combination of everybody comes together and we're buying and selling, and that's the market. Bull crap. That is not it. They're just creating a watering hole. And when everybody comes to the watering hole to get a drink, that's when people eat. When they're predators and they want to take down something for food because they need meat. In this world, in the financial market, money is meat. That's how you sustain yourself. You eat the best. So if you can entice the richest people in the world and the biggest conglomerates in the world that want to speculate as well, you create a watering hole for them to do that. And then you eat. That's what the market's for. Anybody tells you anything else, it's not. They don't know what they're talking about. So when price is trading up into this area, what time is this time of day? What is it? It's after the opening range of 9:30 to 10 o'clock. So we now have the market trading inside of our fair value gap. But now that's the first time it can trade there. So anyone that wants to go short, just as because it rallies up higher like that, you got to wait. Just give it a chance. Give it a chance to let people go after it, because it's the second mouse that gets the cheese. See, this is the cheese right here. It's baited. That's the area that everybody would want to get if they understood what I'm teaching. They want to get that price level. It's real high. It's nice. But they don't understand the market maker sell model, which is consolidation, maybe a stop hunt initially, rallies, touch the original consolidation, rally higher, accumulate. Second stage, reaccumulation. Then it rallies and takes out a higher high right there. It's coloring outside. We saw it on the hourly. We saw it on the 15-minute time. We saw it on the 5-minute chart. There was wicks up here, right? That's what these bodies are on a 1-minute chart. That is completely permissible. We're not going to look at the bodies of a 1-minute time frame when the higher time frame, hourly, 15-minute, and 5-minute, are showing just the wicks. The 1-minute chart's going to have bodies there. Just like when you're looking at a 1-minute chart, if you look at the wick on this candlestick here, go down to a 15-second or 5-second chart, you're going to see bodies on that time frame. It's completely reasonable to expect that. But watch. When price takes out this high here, and we're inside this area as well, I want to be selling short. I want to get short in there. I want to add more if it can afford me outside the coloring of that shaded area. That's premium pricing. Like, that's really good. That's like you selling your house for $100,000 more than what you were originally aiming to do. Who's gonna be mad about that? Nobody is. And so since I'm aiming for something in this area here and targeting all the way down to that black line right there, in my mind, I'm thinking this is the beginning, this is the inception of the trade, and this is my terminus down here. I don't care what this is all going to require of me, because I'm not going to chase my stop loss throughout all that range. I'm going to wait for logical price points, and then once I place my stop, I'm going to sit still. That's one shot, one kill, because I'm taking down my mark. My mark is this level down here. That's the low of that fair value gap on the daily chart. So now when we have this smart money reversal, you don't need that. Wait for it to break in market structure. That's what you get with this little high here. I'm sorry, this low. We get it right there. And then we trade back up into what? The order block. Where's the change in state of delivery on that? That opening price on that candlestick right there. I better plug my laptop in. I went past the battery life here. Give me a second. This is some boring stuff, ain't it? This guy talks too much. Get out of here if that's how you think. You ain't my student. I don't care to read your comments. That's broom you. So if this is in fact correct, any little retracements up should not take out this high. And our premium array that's inside this as well, like this order block, that price is what you see me annotating in the recording. I'll tell you what, if I don't see 25,000 likes on this video or this live stream, I promise you I will take 2 weeks off of live streaming and I won't come back until then. Because this is stuff that I absolutely never, ever, ever wanted to teach. And it's just a little thank you from all of you. 25,000, or you won't see me live stream until it gets there. And if it doesn't get there, I won't live stream. It'll all be pre-recorded stuff. Oh, you're a jerk. It's free, bro. So anyway, the opening price here, extend that forward. Every time we worked inside that, see that? What is it doing? It's building up positions inside the lower half of this candlestick, but there's no algorithm, right? How do we use PD arrays? If it's a premium array, we want to see the lower half of it utilized and the upper half, ideally, not touched. That's that point here. I'm referencing that. Go watch the video. Go watch it at 0.25 speed. You'll see me annotating saying it's working the lower half of the discount portion and it's under the mean threshold. Mean threshold is a reference point to a range like an order block, or it's kind of like equilibrium, but when we're talking about a specific candle, it's mean threshold. In other words, it's threshold for any type of retracements in and still being valid should be, if you're bearish, up close candles at the halfway point and lower. That's where all of your institutional buying and selling is going to be weighed on. In this case, we have up close candles. That's a bearish order block that's validated on this candlestick right here. As soon as we pass below that opening price there, and let me slow down here because I know what's happening right now. You are brand new and you're probably hearing this stuff and you're like, what in the hell is this guy talking about? I'm not your entry-level educator. My assumptions are that you've gone through a lot of the Market Maker Primer course that's on my YouTube channel. If you go through that, that'll give you a little bit of foundation. But starting here is good. Doing all the old stuff and saying, I'm going to go and watch your 2024, you're really missing the opportunity of seeing that stuff live. Because you're going to regret not being here when it happened. And you're like, oh, I watched him call it. It did it. So when we're bearish, we have that bearish order block validated here. So that means from that opening price, anything above that is a potential entry. But ideally, it should never go above the halfway point, which is mean threshold. See how it's doing that? It's staying away from that. That was signaling to me. That's why you see me adding more in there. I'm literally confident, like I could run through a brick wall. I know what I'm looking for, and I know exactly what I have in hand. And I'm like, okay, I'm done. I do one more pyramided entry, and then I just let it ride. And I want to see it attack all these pools of liquidity. And I facetiously troll in the comments as it's happening, because they'll say this is selling pressure, and it's not. The market is pausing in here, and it's all time distortion. Time distortion is where the market's being held in a holding pattern, and it's being used to allow entities that you are not going to see doing what I'm doing. What I'm teaching, they're never going to teach that stuff. I had to create a language to get as close as I could to teach what's really going on here. And you can toss that out. You can say, okay, that story is not real. There's no algorithm, none of that stuff. Okay, do that. If that's what helps you. But if you can see it conceptually with my language, that's all I'm really trying to do. I just want you to be able to see how these things relate to what price is going to do. And it doesn't relate to any other form of trading. That's what I'm kind of getting at. Because I get pissed off when people try to discount my entire life's work and what the Lord laid in my hands, because I would not know this if it wasn't for him. Period. Okay? Trust me when I tell you that is it. And there is no teacher except for him. He's the mentor. So that's the real ghost in the machine. So if we have this candlestick, the halfway point, below it, between its opening price and halfway, all of this is potential areas where you could take a short entry. And your stop loss can be used with this order block, or you can use this high here, depending upon what your risk model and your account size affords. Okay, so we'll take this off now, and that validates the order block right there. We'll take that off, just trying to keep it clean. And now what I'm going to do is I'm going to add the executions, and suddenly everything changes because you can clearly see this ain't no market replay around here, bro. Can't do that with market replay. Okay. Oh, there's buttons missing. I gotta put them back on here because it'll come out. See, he didn't have the buttons up there. It was market replay. You can't see those up here in market replay. And so if you're seeing that on executions there, they were live executions. Look at the price right there. I know I'm getting real premium pricing here because I'm outside of that fair value gap. Above this high, this is turtle soup. This is where smart money does the smart money short. Market maker sell model. Smart money short. Low risk sell order block. The high end of that fair value gap. That's what I'm aiming for, and I'm targeting right in here in this wick. I was trying to time it as it was inside the halfway point of that and that top of that fair value gap. That's what I was aiming for, but it slipped away from me because it's on a lower time frame 1 minute chart. That's what I was doing there. And then over here, you can see we're adding, right there on the wick here. And then I'm aiming for this low to be taken out. And I said the market will aggressively reprice down there because the algorithm is not going to want them to pull their orders. Anyone that's long that has a trailed stop loss here, what kind of sell stop? I'm sorry, I just told you, didn't I? What kind of liquidity would be resting below here? Sell stops, because they're long and they're protecting their longs by putting a stop loss below an old low because the books tell them that's where they should put their stop loss. I love the fact that the books tell them that. I love that these 20-year-old mentors and these old hats that tell you that's how you should trade. This is where you put your stop loss at. Please continuously keep doing that. As long as we keep seeing this regurgitated archaic logic and things that people should be doing in an industry where 90% of the people that use that stuff lose, okay, keep doing that stuff. And then you'll never need to lose any sleep about this stuff ever not working in the future. So this low here, you see me annotate that. And then you see, whoops, put that back up here. You see me annotate. Good grief, Michael. I'm charting drunk. You're under the influence of goofballs. There we are. Now you're starting to look like yourself here, buddy. So below here is sell side, and below here is sell side. And then we have the original consolidation here. So that would be you aim for a run below here. Okay. So there's where your pools of liquidity are and how the market will draw to them, respectively. So you see it drop down. That's wonderful. And then this is your first stage distribution of the sell model. Watch my core content in the 2017 playlist. I actually teach this stuff here in that mentorship. It's all for free on the YouTube channel. You don't need to pay for any of that stuff. Stop buying my stuff from other people, okay? Because you're literally paying for something I put on my YouTube channel for free. So this is the first stage distribution, and then this is second stage distribution. Second stage distribution is your unicorn. It is so quick. It's so powerful. It's the one that you're looking for in every trade that you're looking for, moving higher or lower. If you can identify my market maker sell model or buy model, if you trade the second stage redistribution, that means you're selling short. Or if you're buying the second stage reaccumulation, that means you're going long. You are going to get the biggest, the fastest, the beautiful, easy hold trade that you're looking for. Everybody knows these relative equal lows are there, but not everybody sees the framework that causes this to be second stage distribution. What's this? It's a discount wick. But what happens if you're below it? It becomes what? A premium wick. Boom. How hard can it go above that? Well, you have a little bit of inefficiency here, but then you're met with what? Balanced range. This wick previous wick, all this is balanced. So it's trading up into it, but it's saying, I'm not going to let you go any higher. You're going to stop right there. Turn it around, bro. And then rolls over. Where's it aiming for? Original consolidation. What's below these relative equal lows? Sell side. Okay, wonderful. But what happens if you just have a little bit more expected for lower prices like I did? Like I was telling you earlier in the week that we were going to look for this fair value gap on the daily chart that's defined by this blue line here and that black line that I made darker because I wanted you to see that was my target. You hold this one, but you can't trail your stop loss up to this high. You can't do that. So if you watch the recording, you'll see me outline the ranges of what I'm willing to absorb. And I gave you all this stuff up in here too. And I gave you the lower half. I said, I want to see price stay below that half. Go watch the video because I'm going to make this video much, much longer than it needs to be by doing something that's already been shown in the video. Because I'm actually typing out, you can see it and read it. So the market, in fact, does drop down and starts consolidating. And that low, I told you in the playback, that is the consequent encroachment of this gap between this level here and here. And I'll show you. I'll just use this opening price and then we'll drag it down. Boom, look at the bodies respecting that. See that? That's algorithmic. And that's what I was telling you. If I want to just hold it for the daily range, okay, I get people all the time. They'll find a video clip or they'll see something I said on Twitter a long time ago or recently, or maybe I rant in something. When I brag about what I can do, I'm not lying about that. Okay, when I tell people I can sell the highs and buy the lows, and I can get the daily highs and the daily lows, I don't know how else to prove it to you, but by me actually doing it. Like I'm doing it, and I'm explaining the logic how you can do it too. It's not like I'm saying here's a trick I can do and you worship me. That's not what I'm doing. I'm teaching you as my students how you can find these things yourself, because it's fascinating to me when I get feedback in the comment sections, and I don't read my emails anymore because there's too many of them. But usually in the comment section is people are like, this is wild. Like this is really wild to see this precision. It just keeps happening. Right. Isn't that awesome? It's awesome. And because I don't have much in the way of other people in the industry that I talk to except for students, I love the feedback because I live vicariously through all of you all over again because you're experiencing what I experienced. And after 30 years, you're not impressed with it to the degree that I feel all over again because I see that splash over of excitement because you're finding it in your own charts. You're seeing it and you test it out and you're like, this did exactly right, exactly. And it's laughable when they say the market's not algorithmic or controlled by a price delivery mechanism that is absolutely predetermined. It's scripted. That's the part you don't understand. That's why it's laughable that says it's buying and selling pressure, because from here, it's going to drop down to that low. And how many contracts need to be sold short to do that? Not as many as you might think. It just needs one. Every time the new price has been offered, just like you can't sell your house. You're trying to sell your house up here at this price. Nobody's buying. Nobody's even coming to see it. No viewings. All right, let's drop it down $10,000. Nobody's still doing a viewing. All right, let's drop it down to $25,000 less. Nobody's coming to see it. Oh, well, let's keep dropping it lower. And then all of a sudden, what happens? You start getting people that want to buy it. They're coming to view it, right? But they're not buying it technically. You just want to see it. So that's what you're seeing. People buying it. Then that means you can book at lower price and sell. There's always people coming in the marketplace that want to buy and sell at the market, and they only need that one contract transaction. You are not seeing the effects of price moving higher and lower to these levels because it's buying and selling pressure. Because if that's what it is, how on earth is everything balancing perfectly to my PD arrays to the very levels that random buying and selling pressure, that everybody has all these different methodologies? Everybody's doing something different, folks. But why is it listening to what I'm telling you it's going to do? There's only one constant here, what I'm teaching you, because what I'm teaching you is the market. It is the actual market. It is the source code. As close as I can take you to it, this is it. This is visually what it is. This is Visual Basic if you want to be a computer programmer. You won't get that unless you're a programmer. So anyway, sell side here, it aims for that. And then small little consolidation in here. What's it doing? It's affording traders to do what? The people that know that's going to trade for this level here And below here, it allows them to go short. But it's denying what? Harmonic traders, ratio traders, imbalance traders, support turn resistance traders can't get on board. Lower again. Attacking that sell side. Why? Because they don't want the individuals that are long to pull their orders and get out of their long position, because that means their stop disappears. So the algorithm is re-delivering to that price level. It's coded to do this. This is script. It's a macro. It's something, it's a short list of orders and directives for the price engine to say, okay, I'm going to quickly reprice lower. Quickly. I'm going to keep offering price lower, lower, lower. It doesn't matter how many people are buying it. It doesn't matter how many contracts are being traded to go long. It doesn't matter. That does not matter, folks. And I know I could be out here every single day for the rest of my life, and there's still going to be people out here arguing. And to me, that's fascinating to me. The level of denial is unbelievable. Find somebody that can do it like this. Explain it to you beforehand using buying and selling pressure, because you're not going to find that. You can't find anybody with market profile and VWAP. They're not going to explain every fluctuation like this, and they're sure as hell ain't going to get position entries like this. They're not going to do it. Not consistently. I'm doing it. I'm doing it. So at some point, you're at this junction where you place your faith in the fact that there's consistency, there's logic being shown, and it's transferable knowledge. You don't have to subscribe to the algorithm. You don't have to subscribe to the men in black. You don't have to believe any of that stuff. Okay, you don't have to believe in any of that. But what is price telling you? Because that's really what matters. The time of day and the open, high, low, and close. If you understand that and the basis of inefficiency and liquidity, you don't need anything else. You don't need anything else. You don't need any kind of overlaid indicators, none of that stuff. You'll be able to see everything as it really is. All right, so that completes that day here. And I mentioned, like I said, I could have very easily just closed the trade right here because it's hitting consequent encroachment. And it would have been just a little bit above it for my limit order to trade there. If all I wanted to do was get the low of yesterday. Look where I'm at, folks. Look where I'm trading at. Like, it's real hard to do that with a market order while watching price action. I didn't limit in, I was marketing in it. Watch the recordings. I'm proving to you, because I could have done limit orders and did better entries. But I had to do these hot buttons over here because I'm constantly proving that it's not market replay. Because I love shitting on all these people that come in my comment section. And I'm sure on social media, other places, they're probably talking all kinds of smack. But I just killed them today. I literally just killed them. Made $100,000 in 4 days, bro. Poppy ICT. Yeah, well, it's good. Everybody likes to take the long way around. But this is the low of the day. I could very easily sold short here and bought that, and that's the high and low of the day. What discipline out there is going to teach you that? Nothing else. Absolutely nothing else. So I'm going to ride this out and all this consolidation here. I wanted to add in pyramid here. But I wanted to prove that my stop loss payment was like grandmaster level. Like, there is nobody out there going to have the logic that I'm able to teach you and use. Like, I'm using it. I'm not just form fitting it to things. I'm literally teaching the logic and then implementing it. That's what mentoring is. Mentoring is being able to find the concept that is easily transferable, provide the logic. It may be hard to see and understand in the beginning, but then see examples of this supposed teacher or mentor utilizing it in a manner that is undeniable. And when I talk about things in the higher time frame charts, I tell you, this is where the market's likely to go, and I wanted to see it trade down to that fair value gap on the daily chart. And then it happens today. There are moments of astonishment that you need as a student, whether you're learning from me or anybody else, because if you're not getting a steady diet of that wow factor, you're probably listening to someone that's a fraud. You're probably learning something that isn't going to work for you. You're probably not going to be successful at whatever you're wasting your time with. But when you see it being utilized and you have all these other people around the world that are using the same stuff and they're getting profits with it, And they're attributing it to what you're learning right now. And they're learning right now too. They're excited. They got notes going in their journals just as fast as you are. Heads swirling around, new questions being answered, all kinds of things opening up with new logic and new models they're never imagined before. And this is still nothing. This is nothing. This is nothing. Anyway, and then we had the previous new day opening gaps in here. I told you about that. And look what they did here. Look at this. This is what I really got excited about last night. You watch it on the recording where they wicked up in the last hour yesterday. Look at this. Right at the last portion of the daily range. Boom. Why would they want to do that? Why on earth would the market want to do that? Trailed stop losses here. Inefficiency, balanced price range, bang. That unseats trailed stop losses. They won't get the VIP treatment that ICT got. They won't be able to see the promised land. They can get to the Jordan River, but they cannot cross. They get buried on the mountain. This, hanging around what? This is the high of that daily fair value gap. And what is it doing? It's just marking time. And then drips down and then gives you what? The buyers an opportunity to do what? Place what? Stops. What kind of stops? Sell stops. So this is engineering liquidity. It didn't go down to where I said it was going to go yet. It's building liquidity. They want to build liquidity around that level. What does the market do? Rallies up. Consolidates. It's hanging around the upper quadrant of that daily fair value gap using old new day opening gaps, building fake bull flags. Oh, it's going to go higher. No, it ain't. Bang. And then watch. When we're getting close to this low here, the algorithm knows it needs to do it quick. Or you'll do what if you're long? You're going to pull your order and you're going to collapse your trade. They have to have the liquidity there. So the market does this quick drive down. Boom. And there's my exit rate at the low of the fair value gap on the daily chart. Tell me. Talk to me, okay? Talk to me. You tell me who's proving that. Who's proving it? Who's bringing the evidence that can stand up in court? Because I could do this in front of any court, in front of anybody. I can do it on CNBC if they'll let me. You want to see me trade live? I'll do it right in front of Kramer. I'll go on Kramer and say, watch this. Can you imagine? I'd be out there. Oh, man, Kramer, you don't want me on there. You don't want me on there because I'd be like, look, this guy is the alpha fading indicator. Like, whatever he says, give it a little bit of time and it's going to go the other direction. And I don't mean that to be mean, but that's just the facts. Like, it's crazy. It's crazy. But I would have literally given my left leg when I was 20 years old. If somebody like myself right here is proving this stuff conceptually, executing with it. Okay, now here's the challenge for the soy boys in the comment section. And it may sound to you like I got like hundreds of them or even 20 of them. I don't. I have usually one or two. And you think, oh, you spend too much time here. I love them. That's what makes this fun for me. Like I have to have some kind of antagonistic argument. One guy out there took it to an extreme to try to make a brand out of it. Okay, and I think it hurt him. But just the back and forth, the banter, the shop talk, I love that. Like I love that. And it's fun to be able to do it with other people and they don't take it personal. But for the soy boys in my comment section that I love ribbing, and I know some of them probably still love me, and it's like they know who I'm talking to when I say it. Lucas. But the idea of using multiple screens, okay? Here's your challenge. You might have multiple computers, okay, and screens or whatever, okay? TradingView is welcome to come out and verify that what this was done was only with one account. You can't have multiple accounts on TradingView. You have the account. That's it. As far as I'm aware of, okay, unless it's something that I don't know. But I want all of the folks that hold the opinion that This was done with multiple computers, multiple screens. Here's what your challenge is, okay? You have to frame the trade with all the annotations like I have, every key level, and you have to be able to use the logic that I've taught. And you got to get at the high of the day. And then you got to get out at the low over here. Use that logic. I promise you, no one's going to come forward with doing that. They'll do it in market replay, but they will not do it with live price action. They won't do it in a demo. They won't be able to do it with their live account. They won't be able to do it, period. End of story. It's done. So I have a lot of fun with those types of things. And honestly, you should be thankful that these people do this because it inspires me to do these lectures like this. It doesn't inspire me when I got people constantly telling, I love you, ICT. When I go to other people's chat rooms, oh, I love you, ICT. Oh, man, I'm out of there. As soon as I see that, I'm done. I'm gone. I'm not like that. I don't want that. I like the guys that want to give me a ribbing. Like, bro, like show this and show that. You can't do that. As soon as they give me something I can't do, I do it. It's simple. It's almost like a magic show. Okay. Can you show me a card trick? Sure, I'll show you a card trick. I could show you card tricks all day long. I had live stream card tricks for hours and hours and hours and never run out of them. I like that. I love that engagement. I love that, that playfulness, like, yeah, but it ain't so-and-so. And then, okay, boom. And it's just like, oh, shit. They never come back with a response after that, which is my perfect response. They're like, nothing. They can't say nothing. So when I talk about this stuff, some of you try to defend me and mother me or father me by saying you spend too much time. You should be thankful that they do this because that's the dichotomy here. That's the thing that gets my juices going. Like it makes me want to do more of this. That's like you have no idea. That's when I'm driving around. I want somebody to give me road rage. I want them to get out of their car. Please get out of your car. Please get out of your car because I'm looking for that. I'm looking for an outlet. I'm looking for that. Think about what I was telling you about the 2008. I was looking for something. I wanted stimulation. I was already wealthy. I was already aware of, where I was in the world. I'm happy. But now what do I want to do? I need to do something dangerous. And men are just typically, they're the creatures that do it. Women don't generally do that stuff. So in this education platform, I like when people say, I don't believe you, and they want to say something. If they took the time to send me something in the comment section, that means that I have them emotionally hooked. And that means they have committed, they placed the bet. That's what they've done. They've taken the time to type that out. And then I'm going to honor their time by answering their bullshit and answer it in a way where it leaves them speechless. And if they have a hero, or if they're the hero in a sock puppet account that's offended because I'm doing something they are never going to be able to live up to, dude, you don't have to say that you learned from me. But if this helps you become a better trader, and if you want to sell services and signals and stuff, at least you know how to do it for real now. That's all. That's all I'm trying to do. I'm having fun doing something. I don't mean anything mean-spirited to anybody. I don't wish any ill on anybody else. I don't have that mentality. Like I don't have that. But I do like to have fun, and I can take a good ribbing. When people have something that's said about me funny, they make skits about me, whatever. I laugh my ass off about some of that stuff. It's funny stuff. I'm not hurt. I'm not ashamed and hiding my face. I'm out here live streaming. And do you see anything slowing down? No, because I'm comfortable in my skin. I'm comfortable with who I am and what I'm able to do. And as a mentor, you want to have that mentality because you're going to have students that are going to challenge you. If you don't do this, then you're a fraud. If you don't do this, I don't believe you. You didn't do this because you didn't do it this way. You're always going to have these new challenges, and you get to pick and choose what you want to answer. You have to have the comfort knowing that people are going to come at you. Like I'm the hottest thing right now in trading. Just go out there and look at it. It's just like that. It doesn't mean that I'm right for everybody. It doesn't mean I'm the perfect mentor. But I have to have fun doing this or I'm not going to do it. And this is my way of being fun. Like I have fun with it. And I don't get my feelings hurt when people doubt me or if they say something that may be viewed that other people that are supporting me, they want to go to war about that. I don't think like that. I think it's fun. Like it's fun. When other YouTubers and live streamers, they talk smack about me, they say something funny, I laugh about that. Unless it's something personal about my family or something like that, I have a sense of humor. And some of you out there feel like you have to be my bodyguard. You don't have to be my bodyguard. Like, I'm not insecure. Most of you have insecurities that are really unhealthy for a student. And that's what gives what we have here as a community a very strong cult-like persona. And to kind of like take away the sting of that persona, I just grabbed it and said, okay, yeah, we're the cult of winning, because nobody else's community is going to be like we are. We're dialed in on precision. We're looking for consistency. We have levels of precision that it's alien to anyone else. It's literally ridiculous to be able to say, oh, this is ICT trades like this guy or that guy, or the ICT trades like me. There ain't nobody that trades like me. I like for you to show me who they are if they exist. But here's the 9 o'clock run up. All this spending time above that daily fair value gap, above all this buy side here, and then they ripped it lower. And this is that lower wick that I highlighted on the daily chart. Let's go back out to actually I want to take a look at this. I didn't see ES. I haven't looked at it. I want to see ES real quick. Yeah, it made a higher high there. Look at this. This is ugly, isn't it? This is when I talk about certain things, and I'll use adjectives that may seem a little weird. This delivery in ES, because I get a lot of questions. Why are you in NASDAQ and not ES? Because NASDAQ is a little bit more wild. And because it's more wild, it has a lot more likelihood that inefficiencies will be formed in it that won't be sometimes as clear in the E-mini S&P. So look at the difference between how this price action is here. This is like fuzzy, okay? It's like back and forth. Yeah, there's inefficiencies in here. You can see them, okay? But NASDAQ is a whole lot cleaner. And you can use the NASDAQ and still trade ES. Like, you can look at the inefficiencies in NASDAQ when we're moving lower and say, okay, well, what is ES doing? And if ES is starting to retrace higher at the same time that the NASDAQ is trading up into a fair value gap and it's respecting its lower half of its inefficiency, you're not going to have mark-to-market perfect, the candles stop at the same time on ES to do a little stop on NASDAQ. If you're holding it to that degree of precision, it's going to frustrate you. But you can read price action in NASDAQ and get a good feel for what S&P is going to do. But if you look at what we have in NASDAQ, look at this area here. See how price is delivering all this in here? Contrast that with what you have in the NASDAQ. See how easy, and your eye jumps right to the inefficiencies? Here, here, and here. That is a stark contrast to what the delivery mechanism was in ES. So it's a little bit more fuzzy, a little bit more, it's like a muddying of the waters. It's still going to go where we think it's going to go, but it's not going to be as pristine and clear like you can see clearly with the NASDAQ. The inefficiencies go right into it and then breaks aggressively. So anyway, I think that's it for today. I had fun today. I'm really hungry. I enjoyed murdering the hearts and minds of everybody that likes to troll me. I made $100,000 in 4 days, bro. Poppy ICT. Well, I did it in less than 1 day. One trade, one entry, full pool, one stop loss movement, and that was it. And I could have done way more than that. Like, I could have built this up wildly, doing everything I've done in the past by pyramiding and keeping it going. My question to you is, do you see value in this? In the final moments here together today, live, I want you to think about it. Think about the chances of you having someone that's doing what I'm doing for you right now. I'm doing all this for free. I'm doing this with my own personal time. I always overstay unless my wife says, I asked to absolutely end and we got to do something. I'm always over delivering because I enjoy it. My passion is teaching this because I know what it's done for me. I know what it'll do for you if you're earnestly trying to learn how to do this. The markets are absolutely not random. They're not random. They're not hiding things from you. If you're learning from me, they're never going to be able to hide it from you. Everything is in that chart. but they've done a clever game of constantly pumping out misinformation with indicators and other schools of thought. And the problem is, with good, reasonable money management, it's easy to trick yourself into thinking that that's what makes the market go up and down. Your harmonic patterns, your ratio this, your animal patterns, your Wyckoff, your moving average crossovers, your supply and demand zones. Come on. Everybody has something, right? What works in this industry all the time is sound money management. That wins every time. You can make money flipping a quarter. Heads you buy, tails you sell. Use a reasonable stop loss. Don't overtrade. At the end of the year, you can be profitable. Does that mean that you should sell your course on how to flip the quarter the right way? No. But that's the gimmick, and that's the fraud that's in this industry, because they know that you're chomping at the bit to learn how to make money. And you all think that this is easy, fast money. The only way that occurs is if you're selling an education. I can make millions instantly overnight. All I got to do is put a price tag on this. And you should feel comforted that that's not going to happen. There's no hook here. There's no upsell. There's no nothing. I'm delivering more than anybody ever has and ever will. I'm not going to teach everything that makes me who I am, but what I'm teaching is going to take years for people to catch up to that. Everything I've at this moment taught and made public, it's going to take years for people to get good and proficient with it. And when I start seeing that, I'll come out and teach some more stuff. I won't run out of anything. Okay, I have lots of toys and techniques and tactics, and they're all better than what you've seen so far. Like this is nothing. This is like elementary school stuff. It's very, very, very simplistic things. There's the lowest order of technical science that I have. And it has to be taught this way because the more higher tier stuff, it requires a whole lot more things that I honestly don't have at my age right now, the patience or energy to teach it. Like it would take a great deal of effort. And to answer the ones that are asking, is my book's going to have all that stuff? No. It will have new PD arrays. It'll have new things that amplify what has already been taught here. So that way you have a full panoramic view. But you don't need to buy my books, okay? And I know the people that are partnering with me, they don't like me saying that. And I don't care, because I'm not trying to sell books for money. I'm only writing the book to have an ISBN number and a copyright that says, this was my work. This was my work in print for the first time. Other people will be able to talk about how these things existed. And the ones that have class and character, they have given me credit in their books, which is fine. Even though they taught it wrong, it's fine. But it's helped stimulate this whole frenzy around me and my concepts, smart money concepts, ICT this, ICT that. And because it garners attention, you have people that want to make videos about me. You want to do exposés or expose the fact that I just did what I just did here today. Expose that. You ain't going to touch that subject matter. You ain't going to touch that. You're going to take something out of context. You're going to make it lies. You're going to listen to somebody else's bullshit. And then you're going to try to get viewership on your channel or clicks on your Twitter account because you need money. And that's fine. I'm doing that. I'm doing you a better service. I'm teaching you how to actually learn how to make it in the market on your own steam. And I don't even care if you ever tell me thank you for it. I don't care. That's not what I'm here for. I'm here because I want to lay it down for my son. That way he can see it. He can see these setups in enough time working with it. Come on. Your funded account challenges. They offer you and they afford you what? 15 contracts. I didn't even use 15 contracts. And I didn't break a rule that would have been utilized against you if you were using a particular funded account company. You can't add to a losing position. My position is I'm not pyramiding into a losing trade. Study that. Trust me. Those guys, as much as they would love to be able to copy what I'm doing, they don't want you all learning how to do this because you're going to break them. And that's not my motivation. Earlier when I was having fun about that, don't be sending me some hate mail. Okay? I don't want to hear about it. You got your own little thing. I'm providing you a whole list of new clientele that's going to come in here. And if they listen to me, they'll make money. But the ones that are keyed up like I am, they may take it as a challenge to go take you to the poorhouse. I mean, it only takes one good trader. Think about it. One good trader that has an Ocean's 11 itch. Or you ever seen that movie 21 with Kevin Spacey? And he taught everybody how to count cards. And they went to the casino and they were beating them. It only takes one person to be able to be really, really good at this. And they get their little Ocean's 11 or they get their little ClickUp. And they say, we're going to take down these funded account companies. So you need to stop screwing your clientele. Because if you keep doing that kind of stuff, there's more of us than there are of you. And you're making lots of money. Lots and lots of money. But the doors are open for people like me and who I'm teaching. And they can come in and crush you. Crush you. Because they can make a point to say, look, we're going to army up. And there's going to be a large number of people that are going to follow this same account. You're done for. And it's not like it's going to affect the market because you're not even in a real market. You're in demo. So they're not going to seek and hunt stops. Because if there was a large body of traders coming in like that type of liquidity, they're going to move on that. But because you're all demo, it's an easy way to smash all of you. And that's the number one reason why I would never go out there in that setting, because word travels fast. If I say anything in my private mentorship, it's already on Instagram. It's already in all the other stuff because there's leakers there. They want to be the person that's leaking something exclusive. And that's why I don't do most things anymore at that group. I converse with them. We talk about things. But I'm doing more on a YouTube channel publicly now because of that very reason. So if I went into a setting like I'm going to trade with Top Step, or I don't even know all the other companies anymore, but that's the one I know of because two of my sons went through their thing. But and that's not an endorsement for Top Step, by the way. But if I was to open up an account with them and start trading with it, you think they're going to keep that quiet? Hell no. Hell no. Seeing what I'm doing, Michael Patak would absolutely be copying every fucking thing I'm doing. And there ain't no shame in the game. I would do it too. If I was him, I'd be like, man, whatever this guy's doing, I want to copy that. And what happens when the other people behind the scenes in the back room that work those companies, they know I'm in there, and they just say, well, I can just put a little trade copier here. Come on, I would do it. I would do that. I'm not going to lie about it. I would absolutely do that. If this guy was making it available so I could see what he's doing every single time, you all know you'd be doing it too. Come on. But what happens when individuals out there that learn how to trade really well, maybe not with this stuff, maybe they do trade with other stuff and they're profitable and they're wildly profitable. And they have a bunch of people with them with the extended goal over time to knock you guys out of business. Think about that. So you have to really handle yourself differently. And when people earn their money, don't screw them. Don't screw them out of that stuff. Oh, well, you broke this rule. You didn't do that. Now it's supposedly one company saying you got to record yourself trading. Well, my students, if they know how to trade, they probably would love doing that. They probably want to see if they're trading what I'm showing in my charts. If you're trading like that ICT guy, we got to get this guy out of here. Deny all payouts. That's some funny stuff. I mean, it's not funny for the people that should have been paid out because they've earned the money, but it's crazy. I'm sure they're probably thinking, man, this guy's teaching everybody how to do this stuff. Yep. Boys in Chicago are paying attention to. Trust me on that. Tell me I can't, and I'll make more of me. So that's going to be it for today. I'm going to grab something to eat, enjoy the weekend, and relax. I hope you all had some fun today. I hope you learned something. I certainly had a great time with you all. I hope you watched the video I shared yesterday. It's sped up. If you watch it at 0.25 speed, you don't want to hear me sound like I'm drunk. I've never been drunk in my life, but at 0.25, I'm going to sound like I'm drunk. But watch everything I'm annotating in the chart, and then compare and contrast what I showed you here, how we worked from higher time frame using the PD arrays and the price delivery continuum theory, where everything on the higher time frame has to be confirmed with that lower time frame. Contrast that with what you hear in retail. The higher time frames have to confirm the lower time frame. No, because everything is algorithmic. Prices are going to be reacting to, in the way I'm teaching you, with the lower time frames, because it's high frequency in nature. Algorithmic trading is not slow, snail's pace trading on weekly, monthly, and daily charts and 4 hour. That's not what that is. Not that there isn't algorithms keying off of those time frames. There are, but algorithmic delivery of price, that the engine itself is causing the fluctuations higher and lower, where the price is going to go, whether there's buyers or sellers at any degree of significance, more or other than any other day. These things are predetermined. And I'm telling you, I know some people just don't like to hear it, but if it was anything but what I'm telling you, I would tell you. But if it isn't what I'm telling you, and I'm able to do this, what other school of thought am I employing? What is it? Because you're not going to find that. It's not going to happen, folks. It's not going to happen. But you're welcome. You're welcome to go out there and waste your time doing it. Some people have tried, and they became students. And I wish you all the best with it. I want you to do well. I certainly want my son to come out here and do a better job of being ICT 2.0 or 5.0 now than I was. I want him to do it correctly, not have the self-centered, all about me that I had when I was 20. I wish I had this mentality when I was 20. I would have been a huge name in the industry way before I am right now. And I'm not really that big of a deal, so don't think I'm trying to make myself bigger than I am. But when it comes to trading, everybody knows what SMC is. Everybody knows what an ICT is, and they're polarized. Either, yeah, I know him, he's a crackpot, or yeah, wow, that guy's something else. It's crazy, and that's what it is. And I like being polarizing because that means I'm constantly going to have a fresh perspective put against me. And then over time, those individuals that listen to that bullshit, they'll come here and they'll see what I'm able to do and what my students are learning, and they're doing in their own hands. And there ain't no better testimony than you finding what you're looking for and never understanding what it was that you were seeking until you see it for the first time. And you're like, wow, you're telling me that I can get short at the high of the day? And all I'm trying to get is 10 handles? And what happens if I just hold it? Right. What happens if you hold it for the entire daily range? What happens if you carry it over to the following day and you reach for targets that I'm teaching you the algorithm's going to reprice to anyway? You just got to submit to the time holding on to them. Everything changes, folks, and you won't be able to sleep. You'll have so much energy and excitement. It's not fear. You'll have so much excitement. Like you will be buzzing. You won't be able to stand it waiting to get through work because you want to go home and get into the charts and dig through it and study more. That's how you know you're progressing. If it's hard for you to get into the charts, if you're finding it daunting and you're listening to me and it's like, oh, this guy, I don't even want to go through this anymore. Just stop. Save yourself all the trouble and just stop because you're not equipped, ready, and wanting to do it right now. You may want to do it later on. But if you have to force yourself to do this and learn from me, then that's the surest sign that you're not ready. That's all. That's all it means. And go do something else. Try to learn something from somebody else. There's a lot of other YouTubers out there that are live streaming and actually doing their trades in front of you. Go learn from them. Go try to do what they're doing and see what it does for you. It might work for you. It might fix it for you. But if it doesn't, come back with that perspective. And I promise you, you will find what you're looking for. Because you're going to see something totally different than everybody else's stuff. Even my YouTube channel students, like Taja, well, that's the only one I want to promote right now because there's other ones that are coming up, and I don't want to put a spotlight on them because they're just not quite ready for all the fanfare. Because I put my finger on Tanya's live stream. She has a lot of trolls in there now, and I know they're trolling me because they know I'm watching, and that's fine. They're broke, but the point is I'm not trying to create a drama fest for any of my students, and they're welcome to create that on their own. But even they that are profitable, they're not trading like I trade. You didn't see any one of my students do what I just did yesterday into today. And for the folks that are telling me you took the same trade, show me. Telling me in words. I know what you think. You think by saying, yeah, I took the same trade. And same entry and exit ICT. I want to see that. I want to see that. I had 4 people tell me that in the comment section. And they're not subscribed. They're just somebody that just watched the video and they're just left a comment. I'm telling you that you're lying. And you're lying and you're doing the same thing that people do, as I mentioned here in other lectures, where if you do something in a demo account and it's not even linked to anything and it pans out and you want to show everybody your MT4, your MT5, or your demo account results on TradingView or whatever it is that you're trading with, you want that response from the social media to make you feel good, because what you just did should have already been enough. Like if you know what you're doing and the trade goes just like you want it to do, whether you're tape reading it with no demo account or a demo, or you're trading with real money or a prop firm, the fact that you're following your rules and it's delivering as you expect, that should get you ecstatic that you're progressing, that you're going through the motions, that you're properly learning. You're not going through this rut. You're not stagnant. And the purest sign that you're not equipped and you're not following the rules of going through the process of learning here or anywhere else is if you go on social media and you toss your hat out there and say, give me a tip, give me some money, give me an attention, some engagement, dopamine hit. Let me feel good for a moment, because you can't find the comfort in the progress that you're making studying in the privacy of your own home, your own office, wherever it is you're doing it. Nobody needed to tell me I was doing it right when it started happening. Nobody needed to tell me, attaboy. I loved the fact that I had all the ammunition to go against my family and friends that were talking about me when I was coming up and saying you're wasting your time. They all finished working their life and retired, or some of them are still working in retirement because they don't know how to make money. They weren't successful. But these are the same people that said, you ain't going to be able to do anything with that. And now my name's everywhere. I have people in other countries saying, we talk about you here, blah, blah, what? It's weird. It's weird, right? But I know it can work for you. I know it will. I absolutely know it will work for you. But the problem is you have to believe it will. And how you learn to believe it? Go through the process I'm laying in front of you, just like I'm doing with Caleb. You start like the screenshotting, finding things in hindsight. And the more you do it, you start getting better at seeing it. And then you start applying new concepts as I reveal them in education, showing you examples of it. I'm not just talking about stuff that's after the fact. I'm doing it. I'm telling you what I think is going to happen in the week, and then I'm executing on them. Don't believe me? Go back and listen to every lecture and everything I outlined on Caleb's channel too. They were all before the fact. It's never hindsight. It's never after the fact. I'm just not going to put you in a trade that's going to make $100,000 so you can go online and pretend that you're smart and scam people and say, I'm going to teach you better than ICT, because that's the new flavor right now. Okay, you can teach better than me. You can trade better than me. Do something better than I just did. Outline the week, what it's going to do, where it's going to trade to, and then you make $100,000 in one single trade, single pull. You do that. Show the executions, record the entire thing from beginning to end. Prove it's not a demo. Prove it's not this. Prove it's not that. Go all out. Everything possible. And then you'll get a nod from me. I'll even point people to your channel if you want to be a live streamer about it. But I promise you, you will not be able to do that. In years from now, you will. My best students, they'll be able to pull that same trade off I just did. Absolutely. I'm confident that. I have taught enough. I just went through the process of doing it here. See, the problem is you're trying to do everything and you're not focusing on one concept. Where's the price going? And then you're just looking for anything to get involved in that. If you're bearish, you want to get in as high as you can. So what's the highest premium array? You got to go through their time frames to find it. But you're rushing. You want to be in these 1 minute or sub 1 minute charts, and you want to make big money on small little tiny fluctuations because you think, I don't want to be in the trade long enough. I want to get in and get out. But there's going to have to be a period of time where you hold on to the trade, because you're not going to grow if you just go in there for taking 5 handles in ES and 10 to 15 handles in NASDAQ and be done. You will stagnate as a trader. And what that does is it's rewarding you doing not enough. You have to broaden your range of opportunity by holding on to trades longer. My comfortable time frame, okay, is working inside the weekly range. I don't want to hold anything over the weekend ever again. I just know that I don't have the, like I'm 52 now. I think about things a little bit differently. My body responds to things differently now as an older man. And while I'm not a senior citizen, I do feel physical changes in my body, and I don't want to put things on me that is unnecessary. So I'm completely content with doing the types of things I'm doing here because I'm not absorbing or incurring or inviting over the weekend risk, which is in the climate we have around the world right now, astronomical. Like anything can pop off. Nuclear war, terrorism, biochemical, all that stuff. I mean, anything can pop off, and that will cause crazy town levels of volatility in the marketplace. And if it's not on the right side of my trade that I'm holding over the weekend, when we open up on Sunday, I could be in some serious financial distress. And I just don't want to incur that. So my appetite is working inside the weekly range. I know I have the market's going to trade except for 1 hour. It's broken between 5 p.m. and 6 p.m. every evening. And I think if you have been paying attention, much like the comment section has proven to me, that it's 99.999% just a love fest in there, which is the reason why I don't like showing it. Because it looks like I'm encouraging worship, and I don't want you worshiping me. I don't want you. I see every one of your comments, even the ones say, I don't know if you probably see this comment, but I see all of them. I'm not going to reply to you, but many times it's a statement that you make or something like that. It'll inspire me to talk about something in the recording, as some of you probably already realized today. But I just want to give a shout out to the ladies in the community, because that part of our community is growing a lot. And to me, I find that very comforting, because this is a man's world in everybody else's eyes. But I've said this before, and one dude had to be the guy. Oh, you're simping. Dude, you're broke, and you gotta get your head out of your ass. We have to work harder at being better as a trader, as a man. Women don't have to do the things to compensate for size, performance. We're all like that as men. That's how we think. That's the economy between men. Who's stronger, who's bigger, who's longer, who's harder, who stays up longest, all that stuff. And who has more money? Who has the prettier wife? Who has the best chin line? Who has the prettier teeth? All these compare and contrast and competition. And in trading, women don't have that. Like, I watched a podcast, and it's not a podcast I'm a fan of, by the way, but because it was all women, I literally was like interested. I said, I want to see what they do, and watch how women engage with one another. And they're all traders. They did not one time unzip their pants and let it fall on the table and say, let's see who measures up. They conversed with one another. They didn't vilify one another. They didn't look like they were offended by the other person's perspective. They all felt like, wow, yeah, it's a sisterhood. And I think that the men in this industry should look at one another like a brother and encourage the next guy. It doesn't mean that you can't rib somebody when they need it or when you want to have fun with it, and they shouldn't have their feelings hurt and be like, oh, well, I'm going home and take my toys home. But men generally are the source of the toxicity in our industry, not just in online social media around trading, but even in the industry outside of social media. Like, I'm going to Traders Expo next year. Like, I'm going to be down there. I'm going to be floating through there. I'll probably go grow my beard out and dye my hair and probably get some fake tattoos all on myself, going incognito. But I want to see what it's like walking around all of you, a wolf among sheep. I want to see the bravado, and I hopefully will see some of the ladies that are in the industry, and I want to be able to capture that so I can tell you this was what I observed. But the men are the toxic side of this industry. The women aren't. And it's not surprising that my students that are doing the best, that make the most real money, not prop money, real money, $30,000 a week, real money. Hello. They're female. They're born with a vagina. What are they doing differently? It's how they think. They don't engage social media. They don't even have a social media presence except for being in contact with me. And that's not the secret sauce. It's the fact that they cut out all the bullshit. All the drama, it's out. They don't want drama in their household. They certainly don't want it in their finances. And they don't want it in their thinking about trades, because you have to guard your mind. And young men and older men, you need to start applying that stuff. That's not simping. That's common sense. And the data doesn't argue against it. It's supplying the proof that women are better traders. Doesn't mean that you can't find some reckless guy out there. I'm going to throw out everything and just go all in, full tilt. It's either going to work or it's not. And if it doesn't work, I don't care. But what if it does? I'm going to be a legend. No, you're not. You're a gambler. Proficiency and precision is what I just demonstrated. That to me is impressive. Making lots of money on one trade after having severe drawdown in the same day, that's not impressive. That's gambling. Having big windfall wins. Take out your top 2 or 3 windfalls. How are you making money now? So many people online are making a career over the one big thing they just did, or the one big payout they just did. There's a big buzz right now. One prop firm just did supposedly, I don't know if it's true or not. I don't know. But supposedly there's a big multi-million or almost $2 million payout. And to whoever that student is, or I shouldn't say student because I don't know who it is. Okay, I'm not trying to say it is. I don't know who it is. I heard somebody else talk about it. It was Trades by Matt. And I thought to myself, wow, if they're putting out payouts like that, that's why I was like, okay, well, let me just test the waters and see what's going on. Because if you're telling me that I could somehow, look, man, that's easy. Like, that's easy. You're basically asking me to do a demo account and make millions of dollars. Yeah, I can do that. That's easy stuff. Of course I can. I can do that. I can create proxies and, hey, look, what we're going to do. You want to see record payouts? It's closing time. We had to pay everything. ICT's a partner now. Oh, shit. Oh, anyways, it's boring now. We got to get off here. I'm talking about things that aren't even that funny anymore. So it's funny to me, though. Wish you a very good weekend. Be safe. Study. Go back through that recording yesterday or today, from yesterday's trade into today. Slow speed. Take screenshots of that and then build that same thing that I'm being demonstrating in my charts. Map that out on yours. And then log anything else you see in your own observations, okay? And then I think next week, I owe you a London session. So we'll probably do one Tuesday. Let's just schedule it now. Tuesday morning, which will be my local time, 1:45 a.m. Okay, so it's technically Tuesday's trading. For some of you in other parts of the world may look at things differently, but my time, 1:45 a.m. Tuesday. Okay, we'll meet on live stream on YouTube on this channel, and then we'll talk about things over the London session. Okay, so Monday will be a regular, I guess, 9:30 or so, a couple minutes right before 9:30. I'll try to keep it to like 10:30 because I want to make sure I can get everything else I do in my personal life, and then have time to get everything set up for later that night for me. But it'll be 1:45 a.m. Eastern time next Tuesday, and we'll do a live stream until whenever I get tired of being on there. Okay, so until I talk to you then, Lord willing, be safe.